I'm your host, Nick Toka. On today's show, crypto markets crash. Why Bitcoin, Ethereum, XRP, and Doge are dropping, which goes along the lines of Fed Powell, who says he's also worried about debanking the strained U.S. crypto, of course. And our feature story of today is Japanese stock Metaplanet explodes 3,575% in 1 year amid Bitcoin accumulation. That's what I've been talking about, guys. All this and so much more on today's show. Welcome, folks, to Crypto News Global. I'm your host, Nick Toka. Today is February 11th, 2025, and Bitcoin is in the red, and it's mostly due to the Fed's Jerome Powell, who basically said there's no need to rush reducing interest rates. So the entire financial industry, any assets, not static, solid assets, like securities and Bitcoin and crypto, are all a little bit in the red, because when interest rates drop, people have more money to put into speculative assets, and the opposite goes. If there's no changes in interest rates, then these speculative assets drop a little bit. But before we get into our stories and our crypto and Bitcoin technical analysis and Market Watch, I want to talk about something a little different today, and that would be your bank. Your bank is fooling you, people. When you look at the interest rate they're paying you, I guarantee it's in line with about 0.2 to 0.5%. So in our attempt to gain a little bit of financial literacy every time we talk on this show, let's go through that a little more in depth. So most people have a brick and mortars bank account, and it's not a bad thing. And you should definitely keep your brick and mortars bank account, but you should have that as your checkings account. Savings account, on the other hand, most people have, a checkings account, and that's about it. Now, you want to open a savings account to gain a little more interest. And of course, they tell you that, hey, open a savings account, interest rate 5%, right? So if you go to your brick and mortars, they're only going to offer you, 1%. If you go to the online bank accounts, savings accounts, you'll get more of an offering. Now, the headlines read, when you're watching the basketball game and the bank commercial comes on, hey, go to this no-fee bank account, online account with up to 5% interest, right? What they're not telling you is, if you read the fine print, that 5% interest is on a balance over $1 million. If you have $750,000, then the interest rate is 3%, and going on down the line, and ultimately anything under $250,000, you're getting 0.5%. So take good notice, read the fine print when opening one of these accounts. Now, do I recommend opening an online account? Absolutely. You don't want to do with some little schmo bank. You want to deal with the big guys. But look around and find one that is, insured by the government, the same way your bank accounts are. They definitely exist. And look at the fine print. What you're going to really be using this account for is savings, exactly what it's called. Open an online account. Your brick and mortars account, you're going to be using that checking account as a distribution type account. So your money's going to come in there, your paycheck comes in there, and from there you will use that to distribute to different accounts, including this savings account. Within the savings account, you want to create not just one account, they're free, right? Find the one, of course, that's going to pay you the most interest. Secondly, read the fine print. Make sure they're not bullshitting you saying 5%, but it's really 5% over $1 million in your account. Third, you can open multiple savings accounts within the same umbrella, the same account, but you can have multiples. So what you want to do with this, if you really want to start saving, is you want to create an account for every different type of saving that you are actually trying to save for. So, for example, I'm saving for a trip. Well, you want an account for that. I'm saving for a car. You want an account for that. I'm saving for a house. You want an account for that. The money from your checking, you can make it so it automatically gets distributed to these accounts, so you don't even have to think about it, number one. Okay, so I'm saving for a house. Okay, that's, $400 a month. I'm saving for a trip. That's $100 a month. I'm saving for a car. That's $200 a month. So the money, you can set it up on your brick and mortar account to automatically withdraw these funds going into these different accounts automatically. You set it up once, you don't have to think about it again. This way, it's much easier. You're not stuck, every time you get paid, or twice a month, or 4 times a month, going in, send this here, send this here, send this there. It's not sustainable, and you probably won't do it. But if you make these things automatic, it's definitely going to go. It has to go because you set this little routine up. Now, along with that, you also want to set up a investments account, ideally in a tax sheltered account. And again, money's going to automatically go from your checking account, where your paycheck goes into this investments account, tax sheltered account, ideally. If you really want to save and you want to stay away from high risk and you don't want to get into Bitcoin, I know the show is all about Bitcoin, and I do suggest you definitely put a little bit into Bitcoin. But if you want to stay in the traditional markets, you can, number one, invest in a Bitcoin ETF. And number two, I would highly recommend a index fund. So Vanguard makes a great index fund. It pays 8%. It's called VOO is the ticker symbol. It's basically a total S&P index 500 index fund. So it's investing in the entire S&P 500. It's not investing in one stock. You don't have to think about diversifying. They keep telling you diversify. Well, they're doing it for you. And the best part about it is the management expense ratio on this thing is 0.03, I believe, whereas most mutual funds, they're charging you between 1.5% and I've seen even up to 4%. So this thing is 0.03. So on $1,000, I believe that's $3. So next to nothing compared to $40, right? On a 4% MER. And that adds up over time, because it's not just the $40, it's the $40 next year, and then compounded on top of that, and before you know it, this becomes thousands and thousands of dollars they're taking out of your money just for the liberty of putting your money in their bank, just so they can take it and use it for what they want, which is their own investments. So the first steps, guys, of course, try and get out of debt. Try not to have credit card balance. The way to fix your credit rating is to pay that credit card off to zero every month. Put a small amount, $10. I've said it before, put your Netflix right on just a credit card. Pay it off to zero every month. Your credit rating, before you know, is going to be the best you can possibly get. Open up one of these online savings accounts, research them, find yourself a great account with an actual high interest rate, not a BS, made up account of a high interest, but then you realize after the fact that it's only on $1 million and over. There are some, there's only a couple, but search through it, Google it, and high interest online account, savings accounts, and you'll find a whole bunch. Go to each website, go through the details of their account, and you'll find a couple that do give a decent interest. We're talking about 4 to 5%. Distribute from your brick and mortar checkings accounts to these other accounts, including your investments account, ideally a tax sheltered account, and you're well on your way and better than 80% of the people out there. Everything becomes automatic if you do these payments coming straight out of your checking, and life gets much easier. Do not dip into these accounts. Do not dip into your investments account. Your investment is your investment. Your car saving is your car saving. Your house is your house. Use it for those things. If you suddenly have saved up, 50 grand for a house, and but I want to take a trip. No, don't take out of your house money for your trip money. I want to invest. Don't take money out of that for the other thing. They're kept separate for a reason, and you will see them all grow very nicely over time. And the Vanguard index funds are amazing. They were basically invented to get around all the red tape that all the large banks were charging with all these huge MERs. And how can they do it is because the trading on the top 500, the S&P is the top 500 stocks in the US, right? So if your company is big enough to make it to the top 500, you get on the S&P. If you fall out of favor and you're the 501, well, you drop off the top 500. You drop off the S&P. Now, a little further into that, how much can a stock drop? Well, a stock can drop 100%, right? If it's terrible, it can drop 100%. What happens then, of course, is it gets out of favor. It drops off the 500, and a new stock is there and gets put in its place that's more valuable at the time. But how much can a stock go up? Unlimited. It can go up thousands of percent. So there's your limitation. It can go down 100, but it can go up thousands. So the index funds are doing all this manipulation for you. Any stock that goes off the chart, they're putting in a new one. If it turns to shit, they're putting in a new one. If it goes up, obviously they're keeping it. And how do they do this? They do this all electronically. So this is how they can afford to give you this 0.03 management expense ratio compared to the banks who have some, suit doing all this work and not doing it as efficiently as the index funds do. It's been proven time and time again that the index funds outperform 98% of the mutual funds out there. So use it to your advantage. That way you're using the bank instead of the banks using you. Please, folks. Now, let's get into our market watch and Bitcoin technical analysis. And we do see that Bitcoin is down 2% at 96,000 even. Ethereum's down 3.5% at 2612. Solana down 3.5%, $197. XRP down 1.8%, $2.41. Sui down 4.5%. Make that 3.5% at $3.30. Doge down 2.5%, despite all the good stuff and good news that there's coming out of the States there with Musk. And SHIB also down 2% to 0.00004016. Into our crypto bubbles for the day, we have PLSX up another 10%. Today, virtual up 5%, BNB up 3%. And most things in the red. We've got the biggest loser, ENA, at lost 10%. Pepe down 3.5%. Just going through the charts here. Floki down 5%. Let's zoom out to the weekly. And we have Hex up 80%. PLSX up 61%. Litecoin up 16%. BNB 11%. Ultima up 18%. And on the flip side, we've got ENA 26% on the down. Jupe down 14%, Trump coin down 12%, Move down 12%. And let's move out to the monthly, and we have Ultima up 127%, PLSX up 62%, Hex up 55%. The current crypto market cap for Bitcoin is $1.9 trillion. Ethereum is sitting behind them at number 2 at $315 billion, XRP at 139 billion, Solana 96 billion, Dogecoin 37 billion, Cardano 27 billion, and Tron just under 21 million to wrap up the top 10. The crypto dominance for today, we have a total market cap of $3.1 trillion. Bitcoin at 61.33% dominance. Ethereum down again to 10.15% dominance. XRP 4.5%. And Solana at 3.1% dominance of the total crypto market. 46 in neutral is our crypto fear and greed index for today. Yesterday was a 47 and last week a 54. The crypto halving countdown shows us we have approximately 1,157 days until the next Bitcoin halving in 2028. There's 166,633 blocks until the next halving, and until the year 2140, where the last block is mined, we have 1,176,979 coins left to mine. Total assets by market cap is showing gold at down a bit today, 19.6 trillion. Apple number 2 at 3.5 trillion. Nvidia at 3.2.5 trillion. Microsoft 3 trillion even. Amazon 2.46 trillion. Google 2.2 trillion. Bitcoin 1.9 trillion. Meta, who has now flipped silver at 1.823 trillion. Silver 1.11 trillion. Saudi Aramco 1.791 trillion. Broadcom and TSMC have both flipped Tesla. Tesla now at 1.056 trillion, down 3.5% today. Interesting. And I'm showing something a little bit different here for the Satoshi outlook, and what we're seeing is the total you could buy in Satoshis throughout the history of Bitcoin. So at one point you could get 10 million Satoshis in about 2013 there, and as we see, you can get less and less Satoshis, less and less. By 2018, you could only get, looks like about 5,500–6,000 Satoshis. By 2022, you could get 1,600 Satoshis, and now we're basically at the 1,000 level. Today, you can get 1,040 Satoshis for one fiat US dollar, but it shows you, it's kind of like an inverse chart of Bitcoin, where you can get less and less Satoshis the higher the price of Bitcoin goes. And I do expect that in another couple of years, this is going to end up into the hundreds, and we're going to see this chart go up. How many you can get per US dollar is also going to go down. So stack these stats while you can. Into our US debt clock. I'm noticing today the U.S. debt has actually only gone up about 1.5 to 2 billion, which is interesting because it's been on a pace of at least 4 to 5 billion every day. Currently sitting at 36,468,152,000,000, which equals 107,174 per U.S. citizen, and that would be $323,046 per U.S. taxpayer. So you all owe a lot of money out there, unfortunately, and it's all due to the mismanagement of your money. Sadly, the governments around the world don't care much about your money. So that's why when I say, there's a lot of Democrats out there saying, oh, how is this guy saying that he likes what Trump and Elon are doing? Well, what they're doing is cutting bureaucratic extras. What they're doing is cutting out corruption. What they're doing is saving people's tax dollars, when isn't that really what they should be doing? That's what government is all about. It's not about increasing government. fine, they can go get a job. The rest of us in the private sector, we have no problem. If we have to get another job, we'll go out and find another job. The guys in the government, they're all crying boo-ha-ha because they have nothing else that's useful for the economy, and they're afraid to go out into the private sector and get a job. So, I mean, I don't feel sorry for these guys. They've been corrupt. They've been using your money all these years for whatever their own purposes are, and getting rich off the tax dollars, and they have no accountability and nobody to answer to when it comes to your tax dollars. So it's a bit ridiculous, and I really love what these guys are doing in the States. Now, today, Jerome Powell came out and basically said, oh, we're not going to be changing rates very much because there's no rush to do it. Let's find out. Let's see what's going on. First with the economy, wait and see approach, et cetera, et cetera. And the market on a whole did not like it. The crypto market crash. Why Bitcoin, Ethereum, XRP, and Doge price are dropping. A crypto market crash has occurred with the Bitcoin, Ethereum, XRP, and Doge price dropping after Jerome Powell's testimony. Powell said the U.S. central bank is in no hurry to cut rates. A crypto market crash has occurred with Bitcoin, Ethereum, XRP, and Doge, witnessing significant declines. The price declines came following the Fed Reserve Chair Jerome Powell's testimony before the Senate Banking Committee. Crypto market crash showing that Bitcoin, Ethereum, XRP, and Doge have suffered significant price declines following a crypto market crash. This occurred following Jerome Powell's testimony before the Senate, which was bearish for risk assets, like I was saying before. Risk assets. Powell said there's no need to hurry to adjust the current economic policy. He further remarked that they want to make more progress on the inflation before pivoting. These statements from the Fed chair again highlighted the hawkish stance that the U.S. central bank is currently adopting in terms of its monetary policy. This is bearish for the risk assets like Bitcoin, Ethereum, XRP, Doge, since the Fed's unlikely to cut interest rates anytime soon. It's worth noting that Powell had made some positive remarks for the market, including affirming the central bank's commitment to end debanking. He also revealed that they don't plan on making a central bank digital currency, CBDC. However, these remarks weren't enough to stop the crypto market crash, as Powell's hawkish speech quickly sparked a wave of sell-offs. The Bitcoin price could quickly dropped below the $97,000 support level and is at risk of falling below $95K at the time of writing. CoinGlass data shows that over $200 million has been liquidated from the crypto market in the last 24 hours, with long positions taking the big hit. So it's just these guys are playing the long and short game. Just buy the Bitcoin, damn it. If they weren't playing that game, they wouldn't have gotten wrecked. Donald Trump's contribution to the market decline. U.S. President Trump has also contributed to the crypto market crash with the tariffs he has implemented since he took office on January 20th. Yesterday, Trump announced a 25% tariff on aluminum and steel imports. The president has promised to impose certain tariffs on European Union, to which the EU has also responded that they will retaliate with tariffs of its own. These developments have raised concerns about trade wars, which are bearish for the crypto market. China already retaliated by imposing tax on certain U.S. imports. Now, I believe that a good plan, I think it was 3/4 of the U.S.'s steel actually comes from Canada. As CoinPage reported, Trump revealed last week that he plans to announce reciprocal tariffs this week on countries that imposed unfair tax on the U.S. This move could also negatively impact the market and lead to further declines. There's more from the Fed chair. The Fed, Powell, says he's also worried about debanking that strained U.S. crypto, as crypto firms and their new government allies rally against U.S. regulators for chasing them out of banking. Powell says such tales are a worry he'll address. Oh, look, a finger up. Wow, he's actually acknowledging Bitcoin and crypto. What to know? Federal Reserve Chairman Jerome Powell committed during a Senate hearing to addressing so-called debanking of legal business sectors, including digital assets. Powell also suggested that crypto stablecoins may have a big future, and he supports work on regulation for them. Fed chair said the economy is in a good place and saw no reason to rush ahead with further rate cuts. Bitcoin has shown continued weakness, lower by more than 2% Tuesday. When confronted by members of the Senate Banking Committee about concerns over the debanking trend plaguing the crypto industry, Federal Reserve Chair Jerome Powell said he's also worried about it and is already tweaking internal supervision policies at the Fed. I, too, am troubled by the quantity of these reports, Powell said in routine testimony before the Senate Banking Committee on Tuesday. He offered that one theory is that banks are just very risk-averse about money laundering rules and aggressive supervision under which they're unwilling to welcome customers that may stretch their compliance demands. Oh, that's a bunch of FUD. I've covered on this show in the past that $1.03 trillion was scammed last year in fiat currency, and 300 million were scammed in, it was 3 billion in crypto, and it was 1.03 trillion. So exactly 1 trillion more was scammed in fiat currency in 2024 than Bitcoin. So this is basically a bunch of FUD. We're determined to take a fresh look at it, said Powell, who added that he's been struck by a growing number of cases of what appears to be debanking. Republican lawmaker and a new financial watchdog appointed by President Trump have devoted special scrutiny to the so-called debanking. They say it was encouraged by the previous administration's banking agencies, including the Fed, the Federal Deposit Insurance Corporation, and the Office of the Controller of the Currency. Powell also thanked crypto advocate senior Cynthia Lummis for raising in a recent debunking hearing that the Fed has a policy to direct greater supervisory scrutiny on bankers who engage in controversial speech or activity. He said that the policy is being deleted from their internal manual it came from. While crypto oversight wasn't a central topic at Powell's hearing on Tuesday, a few of the industry's big issues were raised, including stablecoins and central bank digital currencies. Powell said the Fed support new regulatory efforts around stablecoins, the tokens designed to maintain a steady value by being pegged to assets such as the US dollar. Stablecoins may have a big future with consumers and businesses, Powell said. We can't know that now, but it's important for the development of stablecoins in a safe and sound manner that protects consumers and savers, and all, that there be a regulatory framework. The chairman of the U.S. Central Bank also gave a clear answer to his intentions regarding CBDCs, a nebulous threat of a digital dollar that has had long concerned U.S. crypto firms, though no U.S. proposal had ever really developed. When asked, he'd agreed to never launch a CBDC. Powell simply said yes. The possibility of matching Chinese and European experiments with CBDCs had already grown more remote in the U.S. at the election of Trump and congressional majorities who loudly opposed such an effort. Powell will speak again at the hearing in the U.S. House of Representatives on Wednesday, and crypto was set to be the featured topic later Tuesday afternoon at a hearing in the House Financial Services Committee. So there are some good things. You know, he says no to CBDC, which is good, on track for what we want. Nobody wants the central bank digital currency. The Chinese have had that for years, and they're basically monitoring every single thing that every citizen does. And people say, who cares? CBDC. What can they track with a CBDC? Well, folks, let me break it to you easy here. There's no better way to learn about somebody than their financial tendencies. If somebody knows every single thing you buy, every single thing you do, then, for the most part, is their business. For example, you have a phone account. You have what type of phone you've got. Apple Pay, let's say, Google Play, what TV you watch. You've got Netflix, you've got cable. What you shop for. I like apples, I like bananas, I like, junk food. The type of apparel you wear. I wear suits, I wear, pink underwear. Like literally every single thing you do in terms of a purchase, they can go back, and if they really wanted, they could look at every single thing that you have purchased, and they can come together with a very encompassing view of who you are, where you've gone, and what you've done. Literally, there can be this trail of you everywhere you've gone, everywhere you've eaten, everywhere you've driven, and so on. So the CDBC, when they talk about control, it's more about privacy than it is about the currency at all. So keep that in mind. And so I am very happy that, even the feds are saying, no CDBCs. China and, Europe, these like literally woke, maybe not so much China, but European woke initiatives, they'll just go with whatever the government tells them. Oh, yes, sir. Yes, sir. Oh, CDBC, of course, sir. We'll do it. Our citizens will follow. And basically, once they put their position and start a CDBC, there's no going back. You're not going to see people saying, oh, I'm only going to use cash from now on. Well, yes, maybe you will, but after a few years, there will not be any cash. It'll be, if a vendor or, a restaurant or anybody takes in cash, they'll be instructed to take it and destroy it, or take it and send it to, the government. And before you know it, there won't be a single penny circulating, and you won't see any paper money, any coins anymore, and it would strictly be CDBC, and every single thing you do, every place you go will be tracked. On the other hand, there is, of course, the biddy. Now, Bitcoin can be traced because with every transaction, it gets put onto the blockchain, a permanent ledger of every transaction. However, it's not necessarily good at transactional value. It's slow. It takes 10 minutes for a purchase to go through. So ultimately, it's not going to be used as a primary currency. It's going to be used as a reserve. You'll have your Bitcoin, which you've got in your cold wallet, hopefully, and then you'll have a Lightning wallet attached to it, for example, or maybe even an XRP style thing in the future. Those are very fast. Those you scan, you buy a coffee for $2, you scan and blip, it comes right out of your account. The merchant gets paid immediately. Bitcoin, it's a 10-minute thing. So every 10 minutes, the block reward and the new Bitcoins basically get distributed to whoever wins the Bitcoin. So out of the miners, right? So it's not going to go that route. It may be something linked to your Bitcoin, but it's not going to be the actual Bitcoin that's being used for transactions. The Lightning has a excellent speed. I've used it. It's immediate. Now XRP, the way they're talking, it's also immediate payment, and that's why the Europeans are looking at it, and now I've even heard the States maybe looking at it. But still, there is the biddy, and at this point, it seems to me that every company that is in a slight turmoil or failing or wants to do better as an organization, like Michael Saylor's MicroStrategy, they put their money in the biddy. Now, we have the Japanese stock Metaplanet, and their stock has exploded 3,575%, 3,575% in a year since they started accumulating the biddy into their reserve. The Japanese hotel and investment firm Metaplanet witnessed its stock explode by a staggering 3,575% in the last year as it launched an aggressive Bitcoin accumulation strategy. Metaplanet gobbled up 1,762 BTC last year and became the best performing stock worldwide, according to a recent company earnings presentation. By the year end of 2024, our Bitcoin holding were 14 times our market cap in April, a pace unmatched by any public company. Metaplanet is now Asia's largest public Bitcoin holder and a top 15 holder globally. Top 15 globally, that's not bad. Our ongoing ability to access capital markets effectively translates directly into BTC per share growth, ensuring every yen raised increases our Bitcoin reserves. In quarter four, we launched a Bitcoin income generation, a structured capital efficient program that monetizes Bitcoin volatility through open premiums without touching our cold storage reserves. This strategy leverages newly raised capital and excess collateral, generating sustainable revenue and strengthening our balance sheet and accelerate Bitcoin accumulation. Metaplanet holds the 15th largest BTC corporate treasury in the world, according to BitcoinTreasuries.net. Japanese firm aims to acquire 10,000 Bitcoin by the end of 2025 and 21,000 coins by the end of 2026. Metaplanet also continues to operate a Tokyo hotel, which it plans to renovate and rebrand into the Bitcoin Hotel. Yeah, baby. So, brilliant on Metaplanet's side. The Japanese currency was experiencing quite a bit of inflation over the past about 3 to 5 years. So, they made a good move to put Bitcoin on the balance sheet. And not only did they hedge against inflation, but it turns out they are the best company in the world in terms of gains, almost 3,600%. So amazing to hear. And they effectively took the sailor put and they made it into the Asian style sailor put, and they're taking their money and they're basically putting it into Bitcoin, and voila. And I've said it before, it's almost like every company who decides to put Bitcoin on the balance sheet, their stock flies. People love it. Bitcoiners love it. They flock to put their money into one of these companies, and the company is a huge winner because of it. Hopefully earlier you went through and learned a little bit about financial industry literacy, guys, and please go back to the beginning of the broadcast and go through it, and I suggest you do make some changes with your finances to get more in line with keeping more of your money and not giving your money to the bank the way a lot of people have been doing for decades, and that's the traditional way. And also know that you will get there. Money is abundant. Money is everywhere. It's time that's scarce. So use your time wisely. Spend less money than you earn, and start saving today. If you start saving when you're young, you should be able to retire when you're 40 or 45 and not when you're old and don't have the physical health to do the things that you might want to do in your retirement. And if you have a great idea, this is how things are going to get rolling for you, and start that idea today. Don't wait around. Start today, and things will come together for you slowly. Even if you're not ready, start today. You're going to make some errors along the way, but you'll learn from those mistakes, and finally things will be in line. I know 100% that even if you start and fail, you'll have more gratitude inside of you than if you don't start at all, because you will always live in a regret of not knowing if things would have worked out for you. Hopefully you found this stream enjoyable, guys. If you did, please help me get toward my goal of 500 subscribers. And please share, like, comment, and subscribe. And we will see you on the next stream, everybody. Thanks for joining.